Hello and a warm welcome. You've joined us on Market Cafe this Thursday morning. I'm Ashesha Advaryu, and this is a show where we take you through all the global market updates that we're getting from overnight, which are the stocks that you need to keep an eye out on today. But first up, let's take a look at how US markets ended yesterday in trade. And remember, stronger than expected inflation data aided American markets in trade yesterday. CPI inflation rose by about 0.2%. As expected. Core inflation rose by about 0.3%, and we had consumer prices which rose by about 0.2% on a month-on-month basis. It was definitely stronger than what the street was working with, and that led to the kind of uptick that we saw in US markets yesterday. In fact, S&P 500 rose by about 1.1% to a record closing in trade yesterday. We had Dow Jones, which climbed nearly 500 points to near its all-time high levels, and we also had Nasdaq, which surged nearly 1.4% in trade yesterday. So stronger than expected inflation data aided American markets in trade yesterday. But let's also put the spotlight on the kind of moves that we've seen in the gold and Brent crude market. Now remember, yesterday OPEC Plus came out with their monthly report for the month of August. And we'll put the spotlight on that. But before that, Brent crude is trading absolutely flat today to trade near that $66.2 per barrel mark. And all eyes will be, of course, on the very important meeting between US President Donald Trump and Russian President Putin that is expected to happen on Friday. And any kind of cues and commentary that emerge out of that will be very important for the global oil market, because Russian supply could surge, and that will weigh heavy on oil prices. For India, of course, it will be a positive since we import nearly 85% of our crude oil requirements, and any fall in crude oil prices is a positive for India. But as I was mentioning, OPEC Plus also came out with their monthly report, where they've gone ahead and raised global oil demand outlook by about 1 lakh barrels. This is for FY26. And they now expect world oil demand to come in at 1.38 million barrels in 2026. So they've gone ahead and increased their outlook when it comes to oil demand. They're saying higher demand growth and lower supply from non-OPEC Plus countries is likely to aid demand going forward. So very positive commentary that is coming in on higher demand but lower supply going forward. That of course will continue to aid oil prices in today's trade. But as far as gold prices are concerned, that one is also trading absolutely flat today. It is currently trading near that $3,345 per ounce mark. Remember, yesterday it ended higher after we got some commentary about inflation, which was stronger than expected, which has now increased expectations of rate cut by Federal Reserve in the month of September. And remember, lower yielding assets, the likes of gold, generally tend to gain when interest rates are cut, and hence we saw that kind of uptick in the gold market yesterday. It is trading absolutely flat in today's trading session. But let's also put the spotlight on some other news and stories then in trade today. And first up, US Consumer Price Index, that saw an increase of about 2.7% on a 12-month trailing basis in the month of July, and this was lower than what analysts were working with, and their expectation was about 2.8%. Annual core CPI, which excludes volatile food and energy prices, inched up to come in at about 3.1% versus 2.9% in the month of June. It was the rise in shelter costs which drove this increase. Investors may now hope for a rate cut for the Federal Reserve on the back of this data. Remember, Federal Reserve meeting that is scheduled to happen in September, and all eyes will be on any kind of rate cuts that we see, not only in September, for the rest of this calendar year as well. But shifting focus to India's inflation data then, and inflation continues to soften in India as well. Retail inflation slows for the 9th straight month to an 8-year low to come in at about 1.55% in the month of July amid declining food prices. This marks the first time in over 6 years that inflation has fallen below the Reserve Bank of India's 2 to 6% tolerance band. Data also shows that food inflation, which accounts for nearly half of the consumer price index basket, stood at a negative 1.76% in the month of July. Let's in fact go across and listen into what our experts had to say on inflation data.
Inflation remains benign, as it will be over the next few months, at least till the end of this year. And a lot of it is being driven by the food and beverages part, and hence to that extent, the risks also remain on the higher side in the sense that there could be sudden flashes in terms of inflation spiking up. But as it stands now with the monsoon, etc., today's print of 1.6% or 1.55% certainly kind of reinforces the belief that inflation, at least over the near term, will remain on the lower side.
Now, going forward, obviously, as your current numbers undershoot the expectations, there is a chance that since we are calculating inflation on a YOY basis, there's a chance that inflation in the Q3 and Q4 emerges higher than even what the RBI is predicting. So from a reaction function from the RBI's perspective and the monetary policy, I don't think this inflation print does anything much. And we are not expecting any further rate cut from what we have already seen.
I would also like to get your attention to the core print, which has come down further, which is a good sign, and especially if you look at core, which is if you exclude gold, silver, fuel, like petrol and diesel, that's likely to be below 4%. And it has consistently indicated that at least from the demand side, the demand push pressure is not is on the softer side in the economy, with excess capacity being there. So we still see space for further easing.
That's the view coming in on India's inflation data, and remember, all eyes will be on that as well. But shifting focus to Indian markets yet again then, and markets slipped below the 24,500 mark in trade yesterday. This comes after the markets hit an intraday high. Broader indices, both mid-cap and small-cap index, ended in the green. Let's go across and let's in fact go across to Snehi to get us all the action from yesterday's trading session.
Well, yes, after a close in the green that we saw in the previous session, the Nifty closed in the red, and 24,487 to be precise is where we shut shop. So just shy and off that 24,500 mark, a cut of 0.4% on the Nifty. Similar moves on the Sensex, and Bank Nifty in fact took a deeper beating, about 0.8%. The broader end of the market too has nominally ended in the red, with names like Tech Mahindra, Maruti Suzuki, Hero Motor, M&M, Cipla, Sun Pharma, NTPC, all of them gaining 1% and keeping the Nifty afloat to whatever little extent. But the pressure on the index was caused by names like Bajaj Finance, lower by almost 3%, Trent, Eternal, HUL, HDFC Bank, Nestle, Tata Consumer, as well as Bajaj Auto. So mixed moves coming in across the street, because what started as a very strong session or a positive session did not end in the same shade. It was names like Nifty Pharma, Media, Auto, IT, Metal, Energy that managed to close in the green. On the flip side, cuts coming in from financial services, banks, Realty, FMCG and PSU banks. Certain stocks in focus were Alchem, Biocon, Granules, Labs that did well from the pharma space. Maruti Suzuki, Hero Moto, M&M, all of them did well from the auto space. On the flip side, from banks, you had big cuts coming in from HDFC Bank, AU Small Finance Bank and as well as ICICI Bank too. So if you take a look at some of the big winners and losers, it was Sonata Software, Alchem Labs that did very, very well. On the flip side, you had Astral and Praj on the back of its earnings reaction. Both of them took a deep knock, along with some other stocks like Bata India as well as Piramal Enterprises. So that is what the market texture was, and all eyes will be on how the market continues to perform, given that a big geopolitical factor that we have playing in terms of Trump's and Putin's meeting on Friday. So all eyes are going to be very, very focused on where the Nifty heads next.
Indeed, all eyes will be on the markets today, especially after the inflation data that came in not only from India but from the US as well. But to understand what the market setup is looking like today, we now have Abhishek Gaurshinde, Head of Research for ET Now and ET Now Swadesh. Abhishek, morning. Tell us, what is the market setup looking like today?
Good morning, Ashisha. So broadly, if you can see that whatever the macro numbers are coming out from the USA or India, both are appearing quite conducive. And USA post this CPI numbers, the expectation for the rate cut from in September has been increasing. Now, the street is expecting almost 91% kind of a chance for the rate cut in September, and that has been fueling rally in the US market. Coming to the Indian market also, the CPI number comes multi-month low, largely due to the decline in these food prices. But I think that now the inflation in the Indian market is somehow bottoming out, and in the coming months we may see some kind of sequential uptick in the numbers, because for last 9 months CPI numbers have been continuously coming down, and at some point of a time the statistical bottom is working out. And if we can take clue from this post this policy rate, this the Indian this 10-year yield has not been coming down. It is still hovering at the higher end. So I think that somehow Street is building up the case that post the clarity coming out from this tariff war and the tariff related negotiations, then we may see some other another round of a rate cut which may happen in the latter part of the financial year. So from the macro point of view, the things are looking quite conducive. Taking cues from the Asian markets are also indicating for a positive opening in the initial period. And further, the key thing here is that the whatever be the fundamental setup is backing up, it is largely indicating for a consolidation phase. Even in a day or two, we can see some kind of upside, largely on a technical basis. Say, for example, today we can expect some kind of a technical uptick based on the global cues and the FNO positioning, because FNO positioning is indicating for a largely an oversold kind of a thing. They may give some kind of a uptick in the market despite being the volatility, but broader setup is still I think indicating for a consolidation phase, and that may remain, I think, day or two before this long holiday. So we can expect volatility, but some kind of a positivity may be seen because of this positive cues from the global market.
Okay, so positive cues from the global market, but Abhishek, if you can tell us any stocks that you will be watching out for and trade today?
So say, for example, the news flow basis, we can expect that stocks like Paytm, Nykaa, and some of these oil and gas majors post this OPEC outcome may remain on the investors' radar. Second thing is that largely the earnings season have been come down, so the stocks which have not delivered a kind of a performance in the market, we may see some kind of correction in that stocks, and similar kind of a thing that we have seen in the last 2-3 days when this AC stocks related with the consumer durable, especially on the AC sides, have been taken down. So that kind of a thing will remain. It may happen at one point of a time that the flows from this mid cap and small caps may come out, and the street may build up a position in the large cap stocks.
Okay, thank you, Abhishek, for taking us through all those cues that we need to watch out for when it comes to the market. On that note, we'll let you go. Thank you so much for joining us this morning. All right, then, to understand the global market setup well as well, we are now joined by Andrew Ferris, the CEO at Economist Advisory. Hi, Andrew. Good morning. Well, thank you so much for joining us this morning. Now, you know, S&P 500, NASDAQ, they're both at record levels. So let's talk about these first. Now, given this, what does this rally really signal? Do you think in the long term, the market is really going to be able to absorb the uncertainty that's been there because of tariff, especially with respect to China at hand, and also to some extent India?
It signifies, in fact, that we all look at the same statistics and we come to completely different conclusions. The markets apparently were very pleased with the inflation numbers in the States. Well, I'm afraid I've got my Bloomberg in front of me, and let me read out for your clients and for your readers and for your listeners the following. Okay, CPI, which is a straightforward plain vanilla index, it was on April 2.3, on May 2.4, on June 2.7, and on July 2.7. 2.3, 2.4, 2.7. It has been accelerating. Accelerating. Okay, the core inflation rate, which is very important. Okay, again, I'll give you the same numbers. 2.3, 2.2, 2.4, 2.6. It has also been accelerating the last 3 months. And we will be looking very, very quickly and very near, of course, the core, I should explain, it was 2.8, 2.8, 2.9, 3.1. And the PCE, which is the favorite one of the Fed, also was accelerating from 2.3, 2.2, 2.4, 2.6. All those numbers are up in the last quarter. I don't see where inflation is getting better. It isn't getting better. It is accelerating and continues to be above the 2% that the Fed is aiming. So this idea that the Fed is going to cut interest rates in September, I have no idea what it is based on. So S&P is an all-time record high. I keep telling my clients, don't get anywhere near that because this is superbly overvalued. And it's based on, effectively, if I may say so, on nonsense interpretation of numbers.
That's as far as inflation print is concerned. But Andrew, if you can tell us, basis this inflation, the street is penciling in some rate cut from the Federal Reserve next month. What will your expectation be, and how many rate cuts are you expecting for the rest of this calendar year then?
I don't need to repeat. I hate reading numbers to your audience. It's horrible. I cannot. When somebody does that to me, I switch off. Okay, completely. But here, the numbers are so blatantly obvious. What it means for me is that the Fed is not going to cut interest rates in September. Simple. Whatever Trump is saying and whatever he's threatening to do to Powell, I think, is a very decent person, and he's not going to be bent over and do that because Trump threatens to fire him and start a lawsuit against him. I mean, what a performance, what a behavior for the major country in the world towards its own central bank by threatening to do things because he's not obeying to the president. The president, constitutionally, is not there to fix monetary policy. As far as India is concerned, at least in the case of India, inflation is coming down. The RBI did hold interest rates in their last meeting, and they said it is getting better. So if their next move is to cut interest rates, it's not because Mr. Modi called the governor and told him, do this or otherwise I'm going to fire you. You know, India is a very good example of how democracy works for people like the United States that claim they are the shining example of democracy, which they are not.
Absolutely. Andrew, you were just talking about how, S&P 500 has rallied, but you think it is overvalued. So are there any particular, any other asset classes apart from equity or any other equity markets apart from US, like you were just talking about India, any other emerging markets, that you feel are more attractive at this point?
Well, simply looking at markets where index has been up year on year in US dollar terms, very important, US dollar terms, because whether we like it or not, the markets still operate on US dollars. We definitely have Sensex doing quite well. We have South Korea doing quite well. We have Taiwan doing quite well. Okay, to some extent, we have been even having Hong Kong doing very well, but for a very specific reason. And that is because of the performance of Chinese companies in Hong Kong, not Hong Kongese companies in Hong Kong. And also, most of the European Union has also been doing well. And I'm afraid my needle is stuck. Okay, I'll say that loudly. Defense stocks, they are doing brilliantly, and they will continue to do so. I know it's controversially asking people to put money in companies that produce means of war, but that's the way it is. And given also the likelihood that the discussions over Ukraine is not going to lead to anything quick, then the war remains. And also Israel told, irrespective of what the rest of the world is thinking, they are going to occupy Gaza completely. In other words, the war there continues. I'm not gloating. I think it's horrible that people are dying. But at the same time, I will be failing my clients if I don't tell them defense since more than 2.5 years have been doing very well, including India defense companies, including several Asian defense companies. All these are big buys because their performance has nothing to do with interest rates. It has to do with expenses on defense.
So that's the word coming in on global markets and the market setup and how it is looking like for day trade. Andrew, thanks so much for taking your time out and joining us here on ET Now and helping us understand what the outlook is for the US markets going forward. Thanks so much for joining us today. On that note, we need to slip into a very short break, but more news and updates will continue on the other side.
When the stakes are high and the answers are elusive, exclusive. There's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth.
Have started selling for the second straight day. And interestingly, the overall VIX numbers have also gone up by almost their 1 month high levels. Now the PCR, they're still at the comfortable levels for Nifty and Nifty Bank. But interestingly for the Nifty, the short build-up is going in. Very little change in the open interest coming in, with the whole highest open interest strike for put is at 24,000 and for call it is at 25,000. Bank Nifty also, the activity is showing short build-up, and change in open interest is likely to be almost 3% and both the highest expiry open interest for call as well as put stands at 57,000 levels. Now not much change happening when it comes to the FI short positioning. Still it ranges at around 92%. That means it is still actually not giving the market that chance to get a big short covering rally, and that is something which is elusive currently. DI long positioning, that's stable, that's around roughly 70%. And FNO band, there are 3 stocks: PG Electroplast, PNB Housing Finance and RBL Bank as well. It's likely to be a sell on rise market as we weather the next 2 trading sessions on a very chopping manner.
Alright, so that's how the F&O setup is looking like. But Sharad, stay on with us. Let's also discuss which are the stocks that we need to keep on our radar today. And for that, we're also joined by Varun now. Varun, which are the stocks that are on your list today?
With Paytm, because that stock would be in focus today, because RBI has given in principle approval to Paytm Payment Services for the payment aggregator license. Now this license will actually enable Paytm to strengthen its overall merchant acquiring business, because now the company would be able to acquire new merchants, and also this will improve the overall transaction volumes for the company. Although the company will have to undertake the system audit and also including cybersecurity, and the company will have to submit the audit report within 6 months to RBI. So it's a positive news for Paytm, so keep an eye on Paytm today. Also keep an eye on Apollo Hospital, because the company has reported its Q1 numbers, and the numbers are actually very strong, because the revenue is up by around 15% and the EBITDA margin that has improved by around 130 basis points from 13.3% to 14.6%, and the profitability of the company that has jumped by around 42%, and the profit has come at around 433 crores. If you also look at the segmental performance of the company, the healthcare service portfolio that has gone up by around 11%, the AHLL revenues that are up by around 19%, and the healthcare revenues, they are also up by around 19% for this quarter. Also keep an eye on ONGC, because the results of the company, they are good. On a standalone basis, if you look, there is a beat on EBITDA and profitability as well, because the EBITDA that has come at around 181 billion and we were expecting it to come at around 174 billion. And also the profitability of the company that has come at around 8,000 crores, we are expecting it to come at around 7,800 crores. So the overall results of ONGC are in line with expectation. But yes, also there is a news that OPEC has actually raised its overall forecast, oil demand forecast for FY26. So this could actually spur the overall oil prices. So because of this also, keep an eye on ONGC and other oil marketing companies as well.
GC and several other oil marketing companies will be in focus on the back of that. But Sharad, you tell us which stocks are on your radar this morning?
Important buzz flow coming in the consumption space. At first, HUL focus as shareholders are given their nod for the demerger of the ice cream business. Now this will be coming in as a separate listed entity. Interestingly, the business holds brands such as Quality Walls, Cornetto and Magnum. And as per the recent con call, the company has stated that the demerger is likely to take place by the 4th quarter of FY26. Up next, Honasa Consumer, good set of numbers coming in for the June quarter, where PAT and margins beat estimates, and sequentially also the numbers did see an uptake. Now our revenue on a year-on-year basis jumped almost 7.5%, while the margin, however, there was a beating of 69 basis points, but net the numbers were above the street estimates. Also apart from this, Nykaa would be in focus. Inline set of numbers coming in, and the overall gross merchandise value that stood at almost 4,182 crore rupees, and a significant jump coming on a year-on-year basis. Looking at the numbers, overall revenue jumped 23%, PAT jumping up 80% on a year-on-year basis, and the overall GMV that stood at roughly 26% growth.
Alright, so that's Nykaa for you, but let's also put the spotlight on a whole host of other stocks that will be in focus. And Karnataka Bank, that one has reported weaker than expected set of numbers. Net interest income has seen a downtick of nearly 16.5% on a year-on-year basis. PAT has fallen by 27%. Asset quality, meanwhile, has also deteriorated. So GNPA, that has come in at 3.46%, NNPA at 1.44%. This is again a decline of about 13 basis points on a year-on-year basis. Remember, company is undergoing management transition, and that continues to weigh heavy on the stock as well. Meanwhile, a whole host of mining companies, the likes of GMDC, NMDC and MOIL will be in focus, and this is because Lok Sabha has passed the bill to amend Mines and Minerals Act. So any kind of amendment or positive news flow that comes in for the mining sector, and all of these stocks will be in focus on the back of that. Meanwhile, Interglobe Aviation, on the back of some regulatory issue, where DGCA has issued a show cause notice to Indigo for simulator training lapses related to 1,700 pilots. Negative news flow coming in over here. Interglobe Aviation will be in focus on the back of that. And lastly, Nazara Technology, it reported its numbers that were largely in line with what the street was working with, but it has also, most importantly, declared bonus in the ratio of 1:1, and this is the reason Nazara Technology will also be in focus today.
Absolutely. So lots of stocks to watch out for, especially with respect to earnings. But let's also shift focus and take a look at which are the cues that we need to keep an eye out for today. And Snehi is joining us now with just that list.
Well, yes, lots of cues to watch out for. First up, keep a close eye on trade data numbers back home and PPI numbers coming in from Japan. In terms of global earnings, all eyes are going to be on Tencent. But in terms of earnings action back home, since we're done with all the Nifty companies for Q1, from the broader end of the market, a whole host of companies will still be coming out with their numbers. The likes of Deepak Nitrite, ABFRL, you have IRCTC, Gulf Oil, Shilpa Medicare, Brigade Enterprises, Hindustan Copper, Devyani International, Jubilant Food Works, and a whole host of other counters to watch out for. In terms of corporate action and board meetings, Godrej Consumer, Brigade, Concord, Sun TV, Interglobe Aviation, Railtel, NBCC and some other counters will be trading ex-dividend, and it's also going to be the last day to buy shares of Bandhan Bank, Land Pharma, HPCL, Mahanagar Gas and a whole host of other counters in case you wish to be eligible for their record date, dividend record date. In terms of AGMs, watch out for Godrej Industries, Ramco Cement, TVS Supply Chain, City Union Bank and Metropolis Healthcare. And in terms of other events, Atlanta Fed President Raphael Bostic and Chicago Fed President Austin Goolsbee are going to speak. So this commentary is going to be important to track to understand where the US economy is headed if they speak about that. And the IEA is also going to be releasing its oil market report. So watch out for all of these cues, all of them very important to track.
A whole host of cues to watch out for in trade today. Snehi, thanks so much for joining us with all those details. But let's also put the spotlight on how Asian markets have opened this morning, and we have Nikkei 225. Most of the Asian markets, in fact, have opened in the green. That's ASX for you. That one is tepid down 0.7%. But barring ASX 200, if we look at other markets, we have Nikkei 225. That one is up nearly 1.3% as we speak, 556 points higher for Nikkei 225. And remember, Japanese market has been gaining for the last several trading sessions, and that streak continues today as well. Kospi, meanwhile, is up 0.4%. Hang Seng Index is also up a solid 1% as we speak. 25,205 is where it is currently trading, 240 points higher for Hang Seng. We have Shanghai Composite Index, that one is up 0.3%, and Nifty implied open is also suggesting a slightly positive start for the Indian market, up 60 points, 24,616 is where the Nifty implied open is currently trading. So barring ASX 200, Kanishka, all Asian markets have opened in the green today.
Absolutely, all markets have opened in the green except ASX 200, tracking those Wall Street gains, and India market also expected to start on a positive note. But on that note, we'll take a very short break. But before that, let me take you through the stellar lineup that we have coming up for you on the market. First up at 8:20, we'll be joined by Rahul Jain, Director Research at Daulat Capital, to talk about what RBI's in-principle nod for the payments aggregator license mean for Paytm payments. Next up, to discuss all the market cues and what earnings are looking like, which sector is shaping up the next triggers, we'll be joined by Prateek Gupta, CEO and co-head at Kotak Institutional Equities. Next up at 9:40, we'll be joined by Sunita Reddy, Managing Director, Apollo Hospitals, to talk about what the Q1 performance of the company has been like and what are the cues that we need to watch out for the rest of the year. Another earnings candidate, that is Titagarh Rail Systems. Umesh Chaudhary, Vice Chairman and Managing Director of the company, will be joining us to discuss everything that happened in the quarter gone by. Another market guest coming up next for you at 10 a.m. Saurabh Mukherjee, Marcellus Investment Managers, will be joining us to take us through all the market cues that we need to keep an eye out for. Next up, lots of earnings coming up. VA Tech Wabag's management, Skandaprasad Sitaraman, who's the CFO, will be joining us at 10:20. So stay tuned for that conversation. At 10:30 a.m., we will be joined by B. Thiagarajan, who's the MD at Blue Star, to take us through all the trends that are happening in the white goods space. And lastly, at 10:45, we'll be joined by Satish Pai, MD Hindalco Industries, to take us through what's happening in the metal space and what was Q1 like for Hindalco. And on Commodity Central, we'll be joined by Arijit Rao, the Secretary General, India Tea Association, to talk about all the pricing trends that India is witnessing. So a stellar lineup coming up for you on the market and the day ahead on ET Now. So stay tuned. But on that note, let's take a very short break.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I am here to ask the hard questions. Because when others play it safe, I go straight to the heart of the matter.
Now, if you remember, in November 2022, the company had applied for this license, and the overall application of the company was actually rejected because of the FDI guidelines. The company was told to comply with the FDI guidelines, and after that you have seen Anfin actually selling around 10% stake in the company at that time. And in August 2024, it was the Ministry of Finance who actually gave FDI approval to the company for downstream investment in Paytm Payment Services Limited, and that time it was when the company actually went ahead and has applied to RBI for this license, and finally the company has got the online payment aggregator license. Although the company will have to undertake system audit, including one for cyber security, and the company will have to submit the audit report to RBI within 6 months. But this move is actually considered very good for the company, because there are several brokerage houses which are saying that the license will actually enable Paytm to strengthen its merchant acquiring business, because now the company will be able to acquire new merchants online, because earlier it was like the company was only allowed to continue with the ongoing merchants and not allowed to undertake new merchants. But now the company will be allowed to undertake new merchants, will be able to acquire new merchants, and also this will improve the overall transaction volume for this company. So it's a positive development for Paytm, because it was long pending that the company was not able to receive the online payment aggregator license. But yes, since then a lot of competitors have actually entered this space. So let's see in the long term how actually Paytm takes advantage of this license. But yes, for today the news is a big positive for Paytm.
All right, so a big positive coming for Paytm. Let's see how the stock reacts to it today. Thank you, Varun, for taking us through all those details. But let's talk about some more news stories. Now, major relief coming in for all vehicle owners in the national capital, as the Supreme Court has ordered that no coercive action should be taken, at least for now, against diesel vehicles that are over 10 years old and petrol vehicles that are over 15 years old. The interim direction came from a bench led by Chief Justice B.R. Gawai, along with Justices K. Vinod Chandran and N.V. Anjaria.
Former Indian cricketer Suresh Raina has been summoned by the Enforcement Directorate in connection with the 1xBet case. Remember, this summons comes as a part of a wider crackdown on illegal betting apps and platforms, many of which have been promoted by celebrities.
Right, next up, just days ahead of the 79th Independence Day, Delhi Metro Railway Corporation has intensified security checks. Meanwhile, people in Delhi NCR have already begun to experience ordeals of traffic-related restrictions and diversions in light of rehearsal for Independence Day celebrations at the Red Fort.
On that note, we need to slip into a very short break, but more news and updates will continue on the other side.
When the stakes are high and the answers are elusive. There's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I am here to ask the hard questions. Because when others play it safe, I go straight to the heart of the matter.
Favor of this demerger. So if you take a look at the commentary that the company had given during its recent Q1 earnings, the management had said that the ice cream business demerger is likely to be completed by Q4 of FY26, that is this the end of this financial year. So all eyes are going to be on that timeline as well. Just a little background to understand what this development is. HUL is demerging its ice cream business into a new company, which is Quality Walls India Limited, which is KWIL. Now, once the demerger is effective, the Unilever Group, which is the parent group shareholders, will collectively hold a 61.9% stake of KWIL's total share capital. Now, recent update at the parent level suggests that Unilever Group, which is HUL's parent, had entered into a share purchase agreement on the 25th of June between Unilever, the Magnum Ice Cream Company, Holdco Netherlands, and the Magnum Ice Cream Company BV, which are the global ice cream companies of Unilever. KWIL and HUL are not parties to this agreement, so this has happened entirely at the global level. But now that this demerger is underway on the India level, all eyes will be on the timeline at which this happens on the global level, because the Unilever Group will sell its entire 61.9% stake in KWIL to Magnum Holdco company, and once this Quality Walls India becomes a separated listed company, 61.9% of its stake will be held by the global parent, which is the Magnum company, which will also demerge from Unilever. So that's the entire take on this demerger. So all eyes are going to be on when the global parent demerges their ice cream business, because we now have a timeline for the Indian HUL's demerger into Quality Walls India.
All right, so that's about the ice cream business demerger for HUL. But Snehi, stay on with us. Let's also talk about Honasa Consumer. You know, it was a good quarter for Mama's parent company. Most of the matrix did beat street estimates, barring revenue, which was in line. So why don't you do all the number crunching for us and tell us what the brokerages are penciling in for the company post the earnings?
Well, absolutely. Another good quarter coming in for Honasa Consumer. If you take a look at what their scorecard looks like, revenue is in line with our estimates, but it's a beat coming in on the PAT, EBITDA, as well as EBITDA margin. On a consolidated year-on-year basis, revenue has come in at 595 crores, which is up 7.4% year-on-year, in line with our estimates. Net profit has come in at 41.3 crores, up 2.8%, but still a beat versus our estimates. EBITDA has come in at 45.8 crore, which is a downtick of almost 1.5%, but still much better than what we were expecting. There's been a contraction on the margin front at 7.7% compared to 8.4%, but we were expecting just a 5.4% number here, so still much better versus our estimates. On a sequential basis too, they have done very well, and in fact sequentially the margins have expanded quite sharply at 7.7% compared to 5.1% last quarter. If you take a look at the earnings fine print, their underlying volume growth this time is slightly concerning. It's coming at 10.5%, which if you compare on a sequential basis was at 21.2%. So sharp cut has come in their volume. But focus categories like face wash, shampoo, face serum, they've all seen double-digit growth year on year. They've seen 100% growth in face cleanser. Sequential market share gain has happened of 45 bips in all these product categories. Their modern trade as well as their offline retail distribution channels are both up 20% on a year-on-year basis. The direct distribution strategy is driving a 50% year-on-year increase in the direct outlets that have been building in Q1. So that strategy change that they undertook last year seems to be working for them very well. If you take a look at what the brokerages are making of these earnings, Jefferies has maintained its buy rating, target price of 400 rupees per share. Goldman Sachs has maintained its neutral rating with a target price hike to 295 from 275 earlier, and lastly JP Morgan has maintained underweight, but the target price has been hiked to 235 from 197. So that's the take on Honasa Consumer. Revenue in line, but all other estimates beat versus our estimates.
Quarter coming in for Honasa Consumer. Snehi, thanks so much for joining us with all those details. But let's now put the spotlight on Apollo Hospitals. Then it reported its numbers better than what the street was working with on all fronts. Shrishti Sharma, my colleague, is now joining us with more details on this. Shrishti, morning.
Morning. Yes, of course, very good set of numbers coming in from Apollo Hospital. It's a beat versus our estimate on all the parameters, and especially if you look at the margins, it's a 130 basis points of improvement on a YY basis. We were expecting the margin number to at 14%. 14.6% is what the company has reported. In terms of the revenue, the company has seen a jump of 15%. EBITDA grew by almost 26% on a YY basis, and the profit being reported at 433 crores. That's a jump up of 42%. But along with that, if you look at the internals and the segmental performance as well, that remains strong too, because the healthcare services, 11% jump, a very good performance in their AHLL segment, and Apollo Healthco, that has recorded a jump of 19% on a YY basis. And definitely across all the parameters, we have seen a very good set of numbers coming in from Apollo Hospitals. The EBITDA margin expansion is seen to be on the back of the lower employee costs and other expenses as well, a little bit offset by the higher raw material costs. But along with that, what we have seen is that the company has managed to maintain its double-digit growth guidance for FY26, and though the occupancy is now down to 65%, but they are hopeful that this might get better going ahead. So all in all, good set of numbers coming in from Apollo Hospitals.
Absolutely, a good set coming from Apollo Hospitals. Thank you, Srishti, for taking us through that. But with that, we're completely timed out on this edition of Market Cafe. But don't go anywhere, as the market will take all the action forward.